Welcome back, everyone. Now, today I want to start out by talking about some updates on some things that have been in the news, and I'll give you a little bit of extra background since this is the first news session for Consensus Network. There has been an infrastructure that's been building for institutional buyers, whether that's, private offices or institutional buyers, even pension funds, whatever. People are interested in getting exposure to this asset class, primarily Bitcoin. And so even though there's been denials of the likes of Jamie Dimon, the CEO of Chase, and calling Bitcoin a fraud, et cetera. In the background, they've all been kind of developing this infrastructure, or this highway on which they're going to ultimately start buying up this asset class. And so part of that development has included talks of potentially doing an ETF, et cetera. Let's back up a little bit and let me explain one of the limitations. One of the limitations to institutions and, hedge funds, et cetera, from buying a whole bunch of Bitcoin, a bunch of cryptocurrency in these mainstream type outfits is that, usually they don't hold them on their own, right? They don't just have a ledger nano and just put down like $1 billion of assets on it. They can't do that. They need what's called a custodial service, which is basically a third party that houses the assets themselves. And so that kind of thing has not really existed for the most part. There is the couple custodianships now, one in Japan, and some that are getting very close in the U.S., but are not quite there. And that's really been the major reason for the lack of investment in institutional investors in the space. Now, why is it a big deal for there to be institutional investors in this space? Well, the purists, the Bitcoin purists, the cryptocurrency purists may not actually like it as much as they might think they would, because I think it'll change the complexion of Bitcoin and cryptocurrency in general. It will become more of a standard asset. It'll become more of a commodity the way gold is. But remember, when it comes to Bitcoin in particular, there will only ever be 21 million Bitcoin. And what that means is that today, before any significant institutional involvement, we have a market capitalization of $240 billion in the entire cryptocurrency market. That, again, for reference, Apple and Amazon are about $1 trillion each. So all the cryptocurrency that's owned in the world is smaller than Apple or Amazon. So now if you get these institutional buyers, let's imagine what happens to a $6,000, or I think it's like $6,500 Bitcoin that is trading today with a $240 billion market cap in this asset class. What happens when that becomes a $10 trillion asset class? Well, you're going to see Bitcoin prices skyrocket. And that's exactly what the interest for those of us who hold Bitcoin, and I certainly hold Bitcoin along with other assets as well. The hope is that that's the kind of institutional money that comes in and really drives that cost up. So that's why it's a big deal. And again, the limitation has been the custodianship. Now, what was interesting is that in the last couple of weeks, there was some talk about Goldman Sachs, and Goldman Sachs had, for most of you probably knows, a major investment bank, probably the most respected investment bank in the world, perhaps. But Goldman had plans of doing an actual Bitcoin trading desk, and that fell through. It was announced about a week or two ago. And the thing that people didn't take away from that article, which I mean, maybe he didn't read far enough or whatever, but most people who saw the same article that I did was they didn't say we're just not, interested in digital assets or Bitcoin. What they said in that article is we're going to put this trading desk basically in the back burner. We're going to focus on custodianship. And that, in other words, they're going to house, these investments, which is an incredibly profitable business for them to be involved with. So bottom line is Goldman is not backed out. It seems like that might have driven the markets down a little bit, although frankly, it may have just as well been the fact that there was somebody, there was a wallet, there was a Bitcoin wallet holding a whole lot of Bitcoin that's been inactive for 4 or 5 years that just started moving to trading some exchanges as well. So people thought maybe there was going to be a dump of Bitcoin. But whatever the case may be, Goldman Sachs itself has not lost interest in digital currencies. In fact, it is moving towards a custodianship. And the CFO of Goldman actually made that very clear. The day following this news, where there was all this panic about Goldman not being interested, and said, you know what, we are interested, and what you're hearing about us not being interested is fake news, is what he called it. But anyway, so that's Goldman. Okay, so that's only the beginning. What we really, for those of us who've been watching this closely, have been really interested in part, has been the role of or the evolution rather of the possibility of an electronic trading fund, or an ETF. So you know what an ETF is, right? You can go to Vanguard, whatever, and buy an ETF. You can buy the S&P 500, whatever. It just gives you exposure to whatever equities are in there. So the idea of having an ETF for Bitcoin or other crypto assets has been, pretty compelling, and there isn't one that does that. And there have been several that have been shot down. I think there's been, now 11 that the SEC has shot down. And most of them, people largely expected. They were, there was a couple that were shot down that were from the Winklevoss twins of Facebook fame. The brothers who bought, I think, $11 million of Bitcoin about 5 years ago, and now have turned it into $1 billion or so. But those guys, they're not Wall Street guys, though, so it wasn't a big surprise necessarily that they were going to get shut down. Now, there was another ETF that everybody's looking at, and I'm still looking at it, and everybody thinks it'll probably eventually go through. And that was one that is being sponsored by the Chicago Board of Options Exchange, which is a big deal, the CBOE, and they have teamed up with VanEck, SolidX, and they are, VanEck is a very, very big player in ETFs, very revolutionary group in the ETF space. And this was for physical holding of Bitcoin, which was a big deal because it wasn't just derivatives of Bitcoin. And it's, supposedly going to be insured. And so that has all the reasons to potentially be approved by the SEC. The SEC, of course, has not approved it, and they've now punted once, and they've now punted twice. They have not declined it, but about 5 or 6 days ago, they basically came back and said they're still waiting for more comments. So I don't know exactly what that means, but they're holding off until they can collect more public opinion, as they say, like it really seems to matter. I think they're just basically buying time to, in my opinion, I think there's probably two things going on. One is that they just rejected 9 ETFs, and just because the CBOE is involved now, it would just look bad for them to go ahead and approve something from a traditional Wall Street type player. And the other thing is the reason they said they rejected those other ones is because they felt like the Bitcoin markets were not that they were easily manipulated. So, I mean, between now and about a month ago, that fact has not changed. So I think certainly waiting a few months, and I would suspect that it's not going to happen this year. I think we'll probably see it happen in 2019. I think that is probably what's going to happen. Is it gives the market, some additional time to mature. It's maturing at a very, very rapid rate. There's lots of other things going on in the space, which I'll get to in a second. But I think that is the reason that is getting punted. And again, I don't expect it really to happen this year. Now, a lot of people, including myself, frankly, thought that if they came back with that kind of delay again, that it would crush the markets again, and that you'd see Bitcoin, fall below 6,000 again. And in fact, I was kind of hoping that would happen, so I could grab a bunch of Bitcoin, but it didn't. In fact, the Bitcoin went up by about 4%, and I think there's a couple reasons for that. A lot of people thought, they're not rejecting it outright. So if they're not rejecting it and they're saying that they're looking for more opinion on this, then it's likely it's going to be approved. I wouldn't disagree with that. I think that it probably will be approved, but I don't think that's why the markets went up. I think the markets are not. The smart Bitcoin money right now is kind of potentially looked beyond that ETF right now. And let's just be clear that not everybody in the Bitcoin space, thought leaders here, are even that happy about an ETF happening. I mean, one of the arguments that has been raised is that if, these funds, like these ETFs and futures contracts, whatever, that are holding physical Bitcoin, if they have 50% of the world's Bitcoin, if they're controlling that, and then there is a debate within the Bitcoin community about what to do with a fork or something like that, that those funds will just have way too much power and not necessarily the individuals. But anyway, I do think though that in the big picture that the ETF will certainly bring a ton of money into the market. But you know what else is going to bring, in my opinion, is going to be a bigger deal, and it's going to happen much quicker than that. That is Bakkt. Spelled Bakkt. Bakkt is a platform that is supposedly going to be the first regulated platform to enter the digital currency market, which is scheduled to launch its exchange in November. And so why is Bakkt a big deal? Well, Bakkt is backed by the ICE, which is the Intercontinental Exchange. The Intercontinental Exchange owns several regulated platforms globally, including the New York Stock Exchange. So it's a big deal. And what they're planning on doing is effectively, creating a marketplace for digital currencies where institutional buyers can feel much more comfortable getting into the market. Bakkt is also partnered with Starbucks and Microsoft. For what purpose exactly, I'm not sure. But what it tells me is that there is some intent on their part to utilize some of these big brand names to further the cause of using Bitcoin in commerce. Now, so let's talk a little bit more about the Bakkt thing, because it's important. And it almost overshadows this whole ETF thing, right? Because everybody was waiting for the CBOE VanEck Solid X ETF to get approved. But in the meantime, you've got the owner of the New York Stock Exchange, ICE, announcing a regulated platform really intended for institutional buyers. And it's actually going to be live in November. And not only that, but they have now, I think it was yesterday, announced their first product. And that first product is going to be a physically delivered Bitcoin futures contract. I don't want to get too much into futures and all that in the show, but suffice it to say the important word here, the important words is physically delivered. What that means is it's not a derivative. So a lot of the ETFs, for example, that were rejected by the SEC, not the CBOE one, but the other ones, a lot of them were derivatives. They were basically tracking, they were tracking the Bitcoin market in one way or another, but it did not require them to literally pull Bitcoin out of the circulating milieu. So, in other words, if this is if there is, if there's $1 billion or $2 billion of Bitcoin sold through these contracts to institutional buyers, that $2 billion of Bitcoin needs to get pulled out of circulation. And so as you can imagine, what that can do is to significantly, again, drive up the price of Bitcoin. And I would expect it would. I don't see how it can't. Again, we've only got 21 million. Well, not even. We have about 17 million Bitcoin. Some of those have probably been lost. The rest have not been mined yet. This is a big deal. Make no mistake. This is a big deal for cryptocurrency in general, and in particular for Bitcoin. I will say that I do think that the ETF will come along as well. And the value of the ETF, in my opinion, is once you have an ETF, I think that means that Bitcoin, if you look at it as a binary bet, meaning that it's either going to kill it or it's going to go to zero someday, I think an ETF would pretty much guarantee that Bitcoin's around for the next 100 years. Now, again, none of this is financial advice, but I'll tell you, in my opinion, it's certainly a really, really good time to buy, especially since that back platform is going to launch in November. I don't know when exactly the Bitcoin futures contract will actually, the physically delivered contracts will start selling, but we know that the exchange itself is supposedly open in November, and that's the only product that they have announced. So there you go. I think it is a very good time to potentially get in the market. So anyway, that's it for this first week of Consensus Network Weekly Crypto News. This is Buck Joffrey signing off.